Oh boy, oh boy, oh boy. Here we go. We have the ADP employment report coming out, and I could not be more excited for this one because even though people like the jobs report better, I kind of think this one's more. And I like the fact check, if you will, on the government data because let's just say the government data has been a little loony. A little bit in the loony bin, if you will. Mostly because we get high reports and then we get revised down substantially, sometimes as much as 30%. It's kind of crazy. It makes you wonder, hey, wait a minute, what is the point of doing the initial report at all? I don't know. But we do get Tesla deliveries today. We're going to get, let's see here. We're going to get, what's it called? This ADP number. That'll all lead into jobs report Friday. New unemployment rate update. We'll see if it ticks up or stays the same. Yeah, we'll see what's up with this economy. You know, a lot of people are under the impression that there was a lot of sort of buildup of enthusiasm, excitement, spending, and everything leading up to the port strike. And now we have to sort of pay back for all of the port strike buildup we did of inventories, GDP build, you name it, you name it, you name it. Alrighty, so the ADP employment report is now about 30-ish seconds away. We are looking for a number of 125. We'll look at the number, then we'll look at actual job gains in various different categories and industries. We'll look at the wage increases as well, just to see what's going on with wages. And we'll find out. All right, so 125K expected, and we got, here it is, 143, better than expected. 143, much better than expected. That's good. That's a good sign. Should be positive for stocks. Should be positive for the market overall. Some enthusiasm that maybe we can indeed avoid a recession. You want to see this trend up? Remember the prior read? Prior read was 99,000. So you went from 99,000 in August to 143 in the September report. That's actually pretty good. You gotta give them credit for that. So I'm waiting for their website to actually update with the ADP report. They don't actually seem to have it out yet. And the prior was also revised up another 4,000. So you're seeing a very, very slow, modest reaction here in markets right now. Probably going to take a little bit longer to actually get a more thorough reaction. But you are seeing yields move up on this. You're seeing, let's see what we got here. Apple, pretty stable on this. A lot of these seem to be pretty stable based on their previous moves. What do we got? The Qs here. And now dropping a little bit. We're waiting for the details. I think the details will be nice to actually get our hands on, but the actual details of the ADP employment report not out yet. You do have, let's see here. Can we get it? Can we get it? No, still showing August. They have not updated their website yet. Fine then. But either way, it does look like a beat. And now we're just waiting for some of the underlying details of what's inside of the report. What sectors are doing well? Was this government hiring? Was it, you know, I don't know, construction? Who knows? So we'll see. Again, waiting for the report to come out. I'm surprised it's not actually out yet. Nobody. Oh, there it is. Got it. Now it is out. Finally, it has arrived. All right, let's go ahead and slap this report up and go take a look through it. So again, better than expected, and now it's a matter of looking at the deets. The good old deets. The details. All right. Here we go. So I put it into a PDF already, just kind of what's on their website. Okay, no, that's probably just a bad idea. Fine then. I won't put it into a PDF. We'll just do it like this. 143, job creation showed widespread rebound after a 5-month slowdown. That's really good, actually. Only one sector lost jobs, information and technology. That's really good. After a 5-month slowdown, that's fantastic. Okay. Manufacturing added jobs for the first time since April. That's great. Stronger hiring didn't require strong pay growth last month. Typically, workers who change jobs see faster pay growth, but that premium over job stayers shrank to 1.9%, matching a low we saw in January. Oh, wow. Okay, so what's happening basically is people who are switching jobs are not getting paid as much more anymore for making that change. But I mean, this actually seems pretty good so far. Okay, so private sector employment up 143 in September, and again, we should say this is the first up in 5 months. Unclear if this is in anticipation of port strikes. Okay, let's see here. ADP's pay measure uniquely captures a cohort of 10 million employees over a 12-month period. Let's see here. Stronger hiring didn't require larger pay growth, right? Covered that. Let's do this. There we go. Okay, so where did the jobs come from? Looks like education and health, 24,000. Leisure hospitality, 34. Professional business services, wow, growing again. This was negative in the last one, if I recall correctly. Information was the only sector that lost right here. So IT and tech basically. Construction actually up. That's pretty good too. Okay, what about regions? Looks like most of your layoffs were in the south, where you lost jobs. Small businesses laid off. Look at who created jobs. It was really the large and medium created jobs, not small. Yeah, I mean, I think the stresses in small businesses are still heavily present. Okay, year-over-year pay gains for job stayers fell to 4.7%, and job changers fell to 6.6%, all the way down from 7.3%. Wow. Yeah, that's sort of a big drop over here. You're not getting that premium anymore. Okay. Let's see here. Annual pay. Yeah, and of course, the small businesses, they're paying lowest pay gains in small biz. And then sector-wise, it looks like financial activities and education, health, largest pay gains. There we go. Okay. Let's see what other color we have here. Yeah, that's pretty thorough so far. I mean, the ADP report isn't like that extensive to go through. It's a pretty easy report to read. But I'll look at their website a little bit more. So this is not the percent change. This is just the overall charts here. Some pretty colors over here. Pretty much everything green except IT. It's pretty good. I'll give it to the report. I think that's actually pretty bullish. So it does look like the Qs are finally rising. Honestly, it took them a fat minute here to start digesting this data. I don't know if people aren't awake or what, but the data came out right here. And at first you got a red candlestick and you got this sort of volatility over here. But now you're finally rising. The Qs should go positive here in a moment. After this, but this is actually a pretty good read. So yields up about 4 basis points on the 10. The 2's up about 1.4. Gold's down on this, which makes sense. And is Bitcoin moving on this at all? Let's see here. Bitcoin. Oops, that's Bitcoin Cash. This is why this is why I always do BTC. BTC USD. It's all messed up now. I'm gonna delete these out of here. Yeah, a little bit of a pop. I mean, this is the 5-minute here. There's the 1 minute. Little bit of a pop. I'm honestly surprised you're not getting a bigger move on some of these. I would have expected a larger, more positive movement. I don't know, again, if people just aren't up yet because it's an early release. You know, a lot of people might be thinking it comes out at 5:30. But the SPY's barely moving. You've got... Here's the Dow, but I don't think we really get the Dow in pre-market. Not DJI. Yeah. Okay. What else? Nvidia wants to move up. Yeah, Tesla's recovering a little bit too. Enphase. Let's see here. Microsoft closed at 420.69 yesterday. I thought that was pretty funny, in case you didn't see that. So that's like, try to get a buy price at 420.69. Yeah. I know Chinese stocks have done very well. Alibaba up another 4%. Big question, obviously, will the stimulus work? You're going right towards this next line here. I mean, you had a low there of about 57.24. Yeah, 57.24 and 22. You got to 65 over here in January 2024. And now on this Chinese stimulus, you're just sort of going parabolic, frankly. So pretty impressive. Pretty impressive. Okay. So let's see here. Well, again, still surprised you're not seeing more of a run here in the Qs. It just seems odd to me. Like, is it the strike tensions? Is it broader uncertainty that maybe we pulled forward too many workers? You're seeing the pay moves go down, but you combine this with JOLTS, it's actually pretty good. You know, more job openings via JOLTS. Obviously now more hiring per ADP. It's not bad. I wouldn't be surprised for Nick T to swoop in and tell us how great the Fed's doing here. No, not yet. Okay. What about... Oh, yeah. Okay, this is interesting. Worth looking at the yen in Japan. Some confidence this morning out over this suggestion that rates won't be raised as they're still trying to root out deflationary forces. And so you're getting this rebound here on the value of the yen. Although when it fell to these lows September 15th, you didn't end up getting any kind of carry trade issues. So it doesn't seem like this is really as much of a risk anymore. So that's something to pay attention to. Mostly because, a lot of folks always like to refer back to the old black swans as the potential new black swans. But usually that's not how it works. Usually not. Okay. It could also be, tensions regarding the Mideast. But yeah, again, I'm just surprised you're not getting a bigger move to the upside here on the Qs. This should be assuring, unless people just don't believe it, or markets, which is possible, are really pushing on the jobs report Friday. That is possible. I prefer this ADP report. I think this is actually pretty good. I wonder if we can get a ADP employment report sort of like chart. Overtime read. Yeah, we can. At least I think we can. ADP report. Monthly. Nah, I'll keep digging around for an easy chart on that. I mean, I'm sure ADP just has it. Get off of that website. Yeah, let's see. Maybe I could just change it on their website. See, because here's the chart. and shows you sort of that growth. But what I'm really looking for is the chart of the change. So what I might do, oh, I know how to do it. I'll go over here. Yeah. That way we can kind of see where this fits into the other ones. Usually with reports, much like the jolts, you kind of have to take a moving average on a lot of these, just because the data is very volatile. But honestly, 143 is pretty good. I mean, August of 2023, you were 142. Oh, I wonder if I could just go to chart mode on this. Let's see here. Just extract. Just give me the data. Oh, yeah, here we go. Okay, so going backwards, 143 just came out. We had 103, 111. That shows you the week period. Then before that, you had 155, 157, 188, 211, 175, 111, 158, 104, 111, 137, 135. And then you were in like the 300s. So that slowdown really hit August of 2023. And that's for total private. That's kind of useful to see. I like that. That is good information. All right. So all right. Very well. Yeah, weird. The Qs are declining on this. That's wild. Oh, I'm not live on X. Oh, that's stupid. Okay, here, let me fix that. Thank you for that heads up. Hey, if you're just now joining on X, or for the three of you on Twitch, we just reviewed the ADP employment report, which is actually doing quite well relative to expectations. Expectations were that we would get a read of 125. We got 143. Obviously, on that news, you have a present rise in yields and a steepening of the uninverted yield curve. You have the 10-year Treasury yield is basically back up to where it was yesterday, so up 5.1 basis points. The 2 years up 2.4. This is pretty good data. Now, there's this question of, or have these jobs been pulled forward because of the anticipation of the worker strike? And it seems to me like the stock market is trying to snuff out something here, given that the data came out right here, right here, 15 minutes after, and we're almost lower now than where we were when the data came out, which is very bizarre. It's also happening on Bitcoin. The data came out right about here, and you're roughly at the same point now, almost lower. Somewhat of a bizarre reaction by the market for something that should be seen as a pretty decent report. Like, I'm a big fan here. I think this is very good. That said, obviously people are going to apply their moving averages to these lines, and they're going to suggest, it's still on a declining trajectory, but I don't really know if that's true. It just feels more like it's sort of at a leveled out trajectory, which is somewhat in line with a soft landing. Prior read was also revised up 4,000, and then if we did see a little bit of pressure on wage growth for people changing jobs, not as high as it used to be. But again, if you look at sort of this trajectory over time of what the jobs have looked like, total versus, let's see here, total ADP jobs over the past few months in reverse order: 143 for this, then 103, 111, 155, 157, 188, 211, 175, and then 111 in January. Now, a lot of those jobs came from service producing. So in September, let's run that math really quick. Goods versus services. In September, 42 divided by 143, you had 29.3% goods jobs in September. And if I compare that to the prior month, we were also at about 29%. Are we just always at 29%? No, in May we were way lower. So the percentage fluctuates as well. But 1/3 of the economic jobs are going to goods right now. Sorry, less. Yeah, no, it's about 1/3. All right, interesting. Yeah. Okay. So not bad. I'd be happy if I were Powell with that read. Let's see here. Let me do a over time chart. Yeah. If you try to smooth it out, you're certainly 2024 since August of 23, you've notched down to sort of a more normal, if you will, level of growth. But you're certainly in this sort of like stabilization mode, if you will. Not bad. Does look like yields just peaked a little bit at about that 5.2% on the 10-year, now only up 4.9. And again, this does steepen the curve again a bit. But as usual, everything takes a little longer than everyone expects. Gold down still about 71 basis points. All right. Whew. So now, let's see if we can get some boomer or doomer reactions. Let's see what we get.
I mean, I think the whole insurance phrasing is actually pretty appropriate. Again, the economy is pretty resilient. I think we still have some turbulence ahead. Our lead indicators, which you mentioned at the outset, still point to some further weakness, and they're pretty powerful indicators given just the breadth of our sample. And so I think what they're trying to do, again, let's be clear, the Federal Reserve is all in on the soft landing expectation, and so I think they're going to be fairly aggressive to try to increase the odds that that happens. But there is risk in that strategy. If the labor market, which I don't think it is, but if the labor market is sending the false signal and it's the GDP numbers that are more accurate or more representative, then 6 months from now we're going to have this crossroads, because the equity market, I think, is looking at GDP, and the bond market and the Treasury market is looking at jobs.
Well, Joe, Powell tried to solve this tension by just saying the labor market is a real-time indicator and GDP is not. GDP is historically bad at predicting a recession. Does that mean that we just can completely discount it, completely discount the strength and what it tells us about, one, inflation coming in and the likelihood that unemployment moves in a more malicious manner?
Yeah. I wouldn't be too quick to completely discount GDP, because underneath GDP is corporate earnings, corporate profits, business investment. And so I think it is important. I mean, again, I think, policymakers, to be fair to Chairman Powell, I think they are looking at a distillation, but there's no doubt that the Federal Reserve is weighing the jobs market much more heavily than the GDP numbers. Again, I think, the next several months we'll have some weakness. If we're right, then the Federal Reserve will look very prescient. But nevertheless, we're coming at a modest crossroads, I'd say roughly 6 months from now. And that is, and it's not a bearish crossroads, it's more of, is the equity market right and this softness in the labor market's going to stabilize and then we're following GDP? Or is it going to be the latter and we're going to have GDP come from 3 to 2? I wish I had more conviction of which one it's going to be. Policymakers are trying to change that calculus in the next several months, but that is really the heart of the issue.
I love the way that you're phrasing this, because it's really accurate. It makes me feel like right now the labor market is going to dictate the bond market, and it's basically the GDP numbers. Atlanta Fed GDP is what almost every analyst who comes on this show who's bullish on equities points to and says, look, what slowdown? I just wonder how much the Fed could get ahead of this in economic terms. In other words, if they just cut by 50 basis points, if they do another 50 basis point cut, say, in November, how much could they affect change to actually bring the labor market up to GDP and GDI rather than bring GDP and GDI down to the weakness that we're seeing currently in the labor market?
Well, again, I think there are recent actions. There is some lag. So, I mean, the financial markets respond instantaneously. We're already trying to get ahead of the Federal Reserve. But in terms of the labor market, the next 3 months, they're pretty much baked. I actually wish I knew exactly what the numbers would be, but our leading indicators say, listen, there's still some choppiness, but they're not going to go negative. That would be a surprise to me. And so, again, I think where it's going to come out, the Federal Reserve is now trying to look 6 months out and saying, listen, we want to nail that landing. The only risk, I think, the more bullish part of the the economist or analyst community is saying is, listen, you don't need to be cutting at all or not much. And so I think the Federal Reserve, if they're going to fight that narrative, they have to explain why they believe they're so restrictive and yet we have 3% GDP growth. I'm still waiting for the answer, but I think that's something that would be helpful for the Federal Reserve to articulate where they're going to go for the next 6 months.
Joe, but how are you going to review the non-farm payrolls report November 3rd that's looking back at October when you see all these mismatches in the economy and people will be out of work? We know that because of what's going on with the number of strikes in Boeing and the ports.
Well, again, I think you have to look at other things. I think you have to look at the new entrants coming in. I mean, one of the biggest reasons why we didn't have a more material slowdown this year was just the surge in immigration. So you're going to look at a distillation picture. It's not so much what the headline is. It's the breadth of job creation. It's industries that are always strong. Are they continuing to add at a current pace? It's the hours being worked outside of those strikes and areas. So again, like anything in life, there's going to be noise in that report. I think what you're trying to say more than anything is the diffusion or the breadth of industries and companies that they're continuing to add to just the jobs.
Joe, you also talk about something in your research, a phrase that feels like it's been dropped by the wayside as of late, and that is the last mile of inflation. That's some of the unevenness that you see. You expect inflation to remain stubborn in the second half of 2024.
By the way, finally the Qs are moving up. Like after that good report, I'm like, man, they should be up way faster than this. They're about to go positive, finally.
That's not exactly right.
Well, again, I think the Federal Reserve, they're one of the few institutions that can actually affect the outcome because if everyone believes that inflation's under control, it tends to go their way. But, the housing market and all of its esoteric calculations has been, one of the areas that's really been stubborn. And I think that, even Fed officials would acknowledge that. But again, this is a fairly dovish institution. But to give the Federal Reserve credit, they said that they could have a trade-off of bringing down inflation without a material impact in the labor market. Now, to counter, they got a really good luck in terms of the immigration surge, but tracking to date. So again, I'm not cheering against the soft landing. I'm just waiting to see, where does that calculus, given their aggressive cuts and what likely will continue for a little bit of time, where are we 6 months from now? And that's something that we will continue to focus on.
Joe, before we let you go, how much are you expecting the jobs report to surprise to the upside or the downside when we get them on Friday?
Oh, my goodness. I've been employed for 22 years, in part because I've tried to avoid these questions. But I would say there's modest risk on the downside, but take that with a grain of salt. If I was that accurate, I would probably already be retired.
I love it. I expected you to be like, whoa, suddenly disturbance, can't hear you. Joe Davis of Vanguard, thank you so much for being with us. I really appreciate it. In here, in the studio with us, joining us is Tony Rodriguez, head of fixed income strategy at Nuveen. And what do you make of that? What we just were hearing about from Joe, that essentially the bond market's taking its cues from the potential weakening of the labor market, whereas stocks really are looking much more at GDP and GDI.
I think that's accurate, and I think when you take that to the future.
Yeah, all right, enough of this. Yeah, so, I mean, I think what they've said here is pretty right on. I mean, looking at the report, there's nothing bad to say about it. And the Qs are finally positive. This is what I would have anticipated after the report. I honestly think people just were not awake. Because it's interesting, it's not until like the 30 minutes period, when people usually wake up for data, that you actually see it start moving up, the Qs. Whereas when the data actually came out at 5:15, I don't know if people were awake. It was bizarre. But no, this is great. So next on deck are going to be Tesla deliveries, probably in about 20 minutes or so. And we'll see what happens here. Some people are saying that the beat is within the margin of error, and therefore it shouldn't be read so, like, people shouldn't read so much into it. I mean, yeah, but you could have also had margin of error towards the downside, right? So, I don't know. I think this is pretty positive. Okay, so what else here? We've got, again, Tesla deliveries out soon. Then, let's see here. I want to take a peek at the 210 curve. Where do we sit on these now? And then remember, we've got another jobs report after this Friday's jobs report coming out next month, right before the election. So 210s now, we're about 15 basis points uninverted. Usually your pain threshold is going to be closer to 50 to 90. Okay, yields now at a high on the day. 5.3 on the 10, 2.7 on the 2. And as we've seen, pre-market rotating positive here, finally. So looks like actually most things have turned positive. The exception of, surprisingly, the SPY. The Qs are moving up, Bitcoin's moving up, Tesla's moving up, Nvidia's moving up. Enphase actually trying to move up a little bit here. Apple's trying to recover. Amazon's trying to move up a little bit on this. Palantir, it's trying to recover as well. Trying to get over 2,500 there on Ethereum. All right. Very good. Very good. So, okay, very good. Now, we have, let's take a look here at what else we have. Let's see, let's see if, I don't think Jimbo's on until 6, which is fine, because sometimes I prefer these other folks. Oh, they're a commercial. Okay, that's fine. All right, let's see what else some of the suits are saying. Again, should be positive. Oh, I was reading a little bit about the ECB and how there's this potential for the European Central Bank to push rates down further than people have expected. Looks like this ADP report was above all economist expectations except for one. Only one came in higher at 149. Widespread rebound after 5-month slowdown. We talked about that. Okay, but I'm going to write that down. So remember, they wrote widespread rebound after 5-month slowdown. IT and small biz were the only negatives. Not horribly surprising. It's just sort of the IT hiring that has occurred already. Okay. Let's see what else. That's not working. That's interesting. Okay. All right. No worries. So, Nike had some pretty nasty earnings yesterday. But the interesting thing about Nike is they might be less of a macro company or macro story than what you have with other companies. Mostly because Nike might be sort of trend or fad based, and they're just not as in right now, unfortunately for Nike. So, some rough earnings. I wonder how their stock's performing right now. Nike down 7.6%. Boy, last I looked at it yesterday, it was down about 4%. So the decline has accelerated a little bit. All right, fairly well. Yeah, Tesla should be out in about 15 minutes. Somebody here says Nike quality is down. Let's see here. Thoughts on Intel? Should we consider a defense stock since they just got granted? Yeah, I mean, I don't think the country's going to enable them to go BK here. But if Kevin doesn't mention everything in China printing dollars, I'd be... Well, I already talked about China. Where were you? So... Somebody says gold is a fake hedge. Oh. I mean, gold generally does well in a recession. Yeah, Andrew here says, all-time high, what could go wrong? Hey, if you don't have a recession, you keep going. Yeah, I think you're looking for about 460,000 deliveries on Tesla. Okay. Humana. Let's see Humana. Humana stocks fall. Okay, what is this? Member 2025 members in 4-star plus plans is down 94% in 2024. Humana believes maybe potential errors in calculation. Disappointed with performance. Let's see what's going on there. Humana's down 17% after being down 11% yesterday. I don't know much about this company, but that's crazy because that just means you lost like almost 30% of the company value instantaneously. Oopsies. Wow. Look at that. BTC doesn't want to hold up. I'm actually really surprised by that. Same thing on the Qs. I'm surprised you're not getting a larger rally here. Kyle Jackson says labor is tight, corporations are running lean, and they're waiting for Fed cuts to start hiring more. I doubt that. I think really the goal is just getting more profit. I'm hoping revenues rise with the people you have. What about Stellantis? Stellantis. It's actually up 95 bips in the pre-market here. Still waiting Tesla. I think those will come out in about 10 to 15 minutes. As far as Israel, yeah, obviously we saw the strike yesterday. The question now is what kind of counterattack will you get from Israel? We were trading that yesterday. It was crazy. One of the options I sent a trade alert on, I sold it too early, that particular one, but it ended up doubling again after I sold it. And I'm like, oh, darn. But that's always the woulda, coulda, shoulda. But basically what happened is right after the rocket strike, as soon as I saw there were no injuries, I sent an alert to everybody in the Discord, hey, no injuries. Like, we could bounce on this. And I mean, the Qs just rocketed up. It was really great. So, you know, no guarantees. You can make money on the trading. How you trade is ultimately up to you. But if you want heads up like that, check out the Stocks and Psych group if you are trading out there. We've got the price going up Friday at 11:59 p.m. It's only Wednesday, so you get another couple days to decide. Or if you have questions, email us at staff@meetkevin.com. But otherwise, I really enjoyed yesterday just sort of typing out what I was seeing and some of my thoughts. It's pretty active yesterday on the news. So let's see here. Yeah. Listen to this. I wrote 100 missiles fired by Iran. That was the initial volley, right? If all are shot down within the next 10 minutes, good. Market may rebound. If big hits to Israelis because Iron Dome miss, Israel will launch into Iran, severely, which would be very bad. You need 100% of rockets to be shot down, or miss killing people, or things go poopy fast. And then later, I wrote, no injuries. This is good. Reduces the, basically scale of a potential retaliation attack. Attack is over. Going calls. And, that was pretty clutch. That was a call that I picked up at like $2.63. It turned into like, I don't know, what was it, like $6 or $7? It's pretty awesome. So, anyway, yeah. You want to see alerts like that, make sure you're part of the Stocks Insight group. I think it's pretty fun. You get to trade around news, especially when it happens midday. I wasn't in the office at the time, but I was still able to send messages. So, yeah, look at this weird drop here on BTC. Somebody says 300 rockets and no hits. Yeah. Yeah, well, there were definitely hits, but a lot of the hits that did hit were sort of misses. What do you mean the Iron Dome was no use? Of course the Iron Dome is useful. It's got, the arrow, defense systems, David Sling. I mean, you've got tools designed for ballistic missiles. They just don't shoot down, missiles that they've calculated are going to miss. So you do see impacts, but a lot of those are just in unpopulated areas. Yeah, Nike canceled guidance was crazy. Somebody here says, "Bro, we saw the videos." I mean, I think what you're doing is you're implying that the rockets hit, and that's true. They did hit. They hit the ground, and they didn't kill anyone other than one Palestinian in the West Bank, and that was a rocket that was shot down. So I think you have to be really careful with like your logic presentation, because yes, some rockets hit, but the rockets that hit dirt. And all the other ones were shot down to the point where nobody died from an actual rocket explosion. So, isn't a bad reaction to good news a bearish omen? There's something bigger brewing. Yeah, unfortunately. Now, you do still technically have the Qs up. I mean, obviously bonds are selling off on this. Like, you could see, like, the 20-year rather, is getting reamed here. It's just basically giving up what it had yesterday. This is why you don't want the triple leveraged in those, because, like, the ups and downs, oof, those are rough. But, yeah, I mean, you are still positive 12 basis points on the Qs right now, and you were negative, like, 23. So you're still up a third on the Qs. It's actually pretty decent. Pretty decent. Iran showed mercy by purposely not striking houses or people. Yeah, because you'd be in nuclear war then. Oops. That's an old cup of coffee. Get my... right. I don't think the new CEO is in yet at Nike. I'm not sure exactly when he starts. I think he starts soon, because the old CEO wasn't here and in the call, and I think they're still in their transition period. Tesla deliveries anytime within the next, 15 minutes or so. So, okay. Iran is a paper tiger, nothing but weakness. Yeah. Well, it's not so much that they just canceled guidance because there's a new CEO. It's also that, frankly, their guidance is just bad. I mean, they did guide next quarter, and it's down, like, revenues are expected to be down 8 to 10%. I mean, there's no growth at Nike. It's kind of a dangerous stock to be exposed to, because you just don't have growth at all. So when you run it on a PEG ratio basis, you're kind of screwed by a lack of growth. It's not good. Now, obviously, what it'll be at 82 or something like that, it'll be like right here. It'll still be higher than its lows where it had been, but yeah, they're certainly getting hit. Bitcoin moving down now. You've got the Qs really kind of struggling to hold on to that positivity. Find it odd, and then this Bitcoin decline here. So, okay, good. Maybe about 4 minutes away from Tesla deliveries. Yeah, exactly, Alan. Starbucks new CEO capitulated today with the first $3 drink promo. Oh, really? $3 drink at Starbucks? I feel like it's $5 minimum over there. Starbucks $3 drink promo. Let's see here. Wow, look at that bounce right on my line. Iced tea / hot coffee paired with butter croissant, $5. Get your favorite drink, $3. These are like promotions that they do random times. Interesting. Interesting. Huh. All right. So what else? It's a hilarious bounce, perfectly on BTC, and the Qs
Lost the lead.
well, they went negative again. What is this? Yields though meaningfully higher. I mean, you're now at 3.8 on the 10-year. That's pretty impressive for yields. Clearly suggestive of markets here suggesting, all right, unprice the recession. The ADP report was good. It's going to be really interesting because you have this potential pull forward of workers because of the port strike. And then the potential as well for larger layoffs in the coming months. But so far, you're just not seeing that. Oil is up also today. You're at about 75.41. And then still waiting for Tesla numbers. But those could be out within the next, minute, theoretically. Or it'll take them longer. And, you'll be out maybe 15 minutes after. Who knows? So, but as soon as we see it, we will talk about it. All right, let's go to the Tesla investor relations page. See if I can find it. Press releases. Yeah, you should be able to just sort of refresh their press releases page, but usually right around now they come out. So we'll see. Okay. Going into it, Tesla's sitting between these two lines here, 258 and 260. Oh, they must have come out because it's dropping. Down about 1.5% now. I do not actually see the numbers yet. So, October 2nd. Oh, it says 463. I mean, that's in line with estimates. And deployed 6.9 gigawatts of energy storage. I mean, that seems good, actually. I don't know, is that just like profit taking? Because these seem like good numbers. Sometimes I don't understand how the market reacts. This is why I don't like to play earnings, because it's the same thing. It's like, looks good. I mean, their energy deployments went down. They had 9.4 in the last quarter. And but in Q1 they had 4 gigawatt hours. Now you're at 6.9, which is pretty good. Deliveries came in at 4. Oh, okay, because of the exact math. Oh, that might be why. Well, that's kind of silly. So the exact math. I mean, I think honestly these are good numbers. This isn't that big of a deal. I'll write that really quick. Tesla deliveries 462, 890 versus 463, 897 expected. 6.9 gigawatt hours. Down from last quarter, but up over 50% from Q1. Yeah. Again, me personally, I think the numbers are good. Like, it shows you that, hey, you don't have this substantial slowdown that people might be worried about. There you go. Now you're finally moving slightly positive. I don't know if it's profit taking or what, but I'll tell you, when data comes out, it is so funny how markets react. Okay, so that's that. Now, that puts us still in line for pretty much flat vehicle deliveries year over year, maybe even slightly negative. So we'll see. It's going to come down to earnings too now. You know, what are margins going to look like? What's the robo-taxi event going to look like? Geez, I don't understand sometimes this market in the short term. Look at this. Why? Why are the Qs falling? Why is Bitcoin falling? The ADP numbers were good. Is it because, you know what could be going on? I'm going to have a thesis. I'm going to write down this thesis. Thesis today. Okay. So ADP numbers were great. Unless this is representative of a pull forward of demand. This helps reiterate soft landing narratives. However, markets don't seem convinced. Why? Okay, well, let's think about why markets don't seem convinced. Well, number one, you have the potential Israeli counterstrike. You have the port strike, lots of strikes. And then you have, oh, hold on, what's this? This is going to be Tesla delivery numbers. Watch. They're late.
Pretty darn close to the estimate. Tesla delivering 462,890 vehicles in the third quarter. The estimate on the street was for 462,000.
Yeah, all right, whatever. We already know this. Potential Israeli counterstrike, port strike. But the other thing, too, is maybe you're unpricing future cuts, right? Are you potentially unpricing future cuts in a Fed that, again, waits too long, therefore risking a recession? However, bond yields spiked substantially, suggesting, higher for longer, basically. Wow.
462,890 vehicles, just a smidge more than the street was expecting. Guys, I'll send it back to you.
Hey, Phil, I'm going to bring you into the conversation we were just having because Jim was bringing up the idea, at what point does the increasing number of EVs actually start to affect the demand for gasoline? I don't know when we get to that point. I mean, we're at still very low percentages, aren't we, in terms of ownership
we're not
worldwide?
There. We're not there, David.
We're not, right? Yeah.
Yeah, worldwide, I mean, you definitely are seeing the growth in China certainly impacting the demand for ICE vehicles in that market, which is the largest market in the world in terms of vehicle sales. But we're not seeing it definitely here in the United States. In terms of vehicles sold, it's going to be about 9% relative to the rest of the market. ICE is still about 79, 80%, and then hybrids coming in at about 11 or 12%. So you're seeing the slow erosion in the ICE market, but definitely not to the point where you can say EVs are telling people, look, you don't need to buy an ICE vehicle, and therefore gasoline demand is dropping.
Well, Phil, Jim, is this the last thing that happens before we start talking about autonomous and the big day? Because I've got to tell you, Phil, the expectations,
yes.
We don't have a lot of things out there that I just hear people are so excited about other than this day. It's really rather amazing.
Absolutely. It is the thing that everybody is focused on for two reasons, Jim. First of all, we finally will get greater clarity about Elon's robotaxi vision. More than simply, someday we're going to have these vehicles and they're all going to drive us out on the road. We've heard that for years, and frankly, I don't think it moves the needle anymore. What people want to hear next week from Elon Musk is, first of all, what the vehicles will look like, and we've heard some things being leaked out about the possibility that it'll be a slightly different design, almost more of a microcar, if you will, as one possibility. And B, when will we see these actually start to go into the market, albeit in geofenced areas? They're not going to be widespread all over the world, but in geofenced areas. And how much clarity does he give us in terms of the growth that he expects? That's what people are focused on. And then second to that is also, do they tell us, look, in the meantime, we're also going to be focused on delivering a lower priced vehicle to the market? There is no doubt that when you look at the demand for the Model 3 or the Model Y, the reason those are so strong, so successful, is because of the pricing that they come at.
Yeah, exactly. You got to get that. The pricing is attractive. You know, it's just not attractive enough to sustain massive overproduction. Very interesting, though. Again, Q's down on good data, honestly. You're literally going line to line on Tesla right now. Look at this. You initially popped right to, I have a line at 260.09. I mean, it probably should be 260, which is where we got rejected. Literally going line to line down to 250. It's pretty remarkable. All right, let's see what people have here. Market moves are controlled by the deep state. Okay. Let's see. Somebody says, I took a loss yesterday. I'm downsizing today. Keep it light for the rest of the week. Well, good luck on the trades today. It technically missed deliveries. There are a lot of people who are quoting old numbers. You have to realize estimates for deliveries are revised constantly. Constantly revised and revised, revised. And they're revised, quite frankly, probably up to, last night or even theoretically this morning. And so, like, for example, I tweeted, and this guy quote tweets some other person whom I don't know. And he says, where do you get your information from, little boy? And he's basically trying to argue that, here, beating Wall Street consensus of 461.9. But the latest estimate, which I post here, is 463.897. So, like, some people in the cult are going to go, oh, they beat. But then when you actually look at what the last consensus read was missed. I don't care. I actually think the numbers were good. Like, I want to be clear about that. I think the numbers are good. But people get so sensitive because they lack reason. They're irrational because they're overexposed to one stock. Gall is back with a $10 donation to suggest we're forming a Head and Shoulders. Get ready for a big or a drop. Little recovery, like in every recession. Mark my words, this is a global issue. Debt issue will play a role. Ooh. Somebody says, Q's gonna run today. They will pump until the collapse. So 25, no cuts being priced in when 50 was set. Thanks. Yes, I do think the markets are unpricing a 50 rate cut, but I mean, frankly, I'm not like this isn't that big of a deal. The ADP, if we get 2 in a row like this, it's going to reiterate how good things are. All right. So what else do we have here? Tesla's down about 3% now. Looks like it's trying to hit a floor here. Somebody here says, I'm waiting for Tesla to go back to 150. I took a loss in Ibiza just to show Meet Kevin I was cool. Let's go. Ibiza, that's awesome. Alright. Interesting commentary. Somebody says, Kevin's particularly dope today. Oh, thanks. Alright. Cool. So let's see here. Let's see what the Doomers have to say. Well, I mean, we'll finish listening to them.
Decision regarding guidance. This is the CFO on the call.
Given our CEO transition, and with 3 quarters left in the fiscal year, we are withdrawing our full year guidance.
Oops.
We intend to provide quarterly guidance for the balance of the fiscal year.
And it's bad.
This provides Elliott with the flexibility to reconnect with our employees and teams, evaluate the current strategies and business trends, and develop our plans to best position the business for fiscal 26 and beyond. To that end, we have also decided to postpone our Investor Day.
Referring to Elliott Hill, who comes in a couple of weeks. Postponing the Investor Day, Jim, doesn't seem like it was that big of a surprise.
No, but this was a truly remarkably bad conference call. The other time I've heard someone withdraw guidance was at GameStop. Wow. This was a call where it just took your breath away. The amount of destruction that was done by one person, by Donahoe, is extraordinary. And we may have seen the peak for e-commerce when it comes to things over $100. The dismissal that they had for Foot Locker and for Dick's, so stupid, so arrogant. There wasn't anything that this company did right during this period, other than perhaps maybe not that bad in China. But I urge
China
people.
was great here. The traffic declines, notably across Nike Direct, were more significant than anticipated.
Oh my God, it was so. But David, it was down. You
That's
got
the
down
direct-to-consumer channel that Donahoe was obviously focused on.
That was Mr. Tech.
He was brought into
Mr. Tech comes in, and you know what? These, in the end, are shoes that are fashion. People don't. You can spend more than $100 for a pair of sneakers.
You're going to try them on.
Exactly. Now, this is something that Mary Dillon told me at Foot Locker. I mean, and they're doing a heavy basketball, which is good. There's a moment in the comms call where there's just such an existential crisis where French is basically, we're a running company. Hey, we're a running company. Well, no kidding, Steve Prefontaine.
Hence, Deutsche Bank. This turnaround's a marathon, not a sprint. Bernstein, deep in the abyss. Ugh. More bears than bulls remain equal weight at Morgan Stanley. Most of the analysts.
Some folks seem to be suggesting that the Tesla numbers are not ideal because maybe more growth came from China, and margins are pretty bad there. Thesis, I suppose. Okay. So, let's see here. Oh, did you all know this? I thought this was crazy. Okay, look at this. Kamala Harris turned 60 in 3 weeks. Tim Walz is 60. Did you realize they were the same age? What? Hot damn. I did not realize that. I thought there was like a 20-year age gap, okay? Forgive me. I literally thought, oh, okay, Kamala's gonna get an older white dude to sort of like balance the ticket. Dude, they're the same freaking age. That's crazy. Ay. Like, I don't know, like, what I'm more surprised by. Like, that Kamala is that old? Or that Tim is that young? It's the same age. I don't understand. If I had to guess, I would have guessed like 70 and 50. Yeah. Well, so, well, it's just my take, I don't know. Just sorry, just saying. Anyway, if you want to see stuff like that or me complaining about the bold, make sure to follow me on X at RealMeatKevin. Yeah, look at this. Elon Musk tweeted, due to immediate and excessive use of bold font on X, it will be removed from view in the main timeline. You will have to click on post details to see anything in bold. My eyes are bleeding, says Elon Musk. Like 12 hours later, or 22 hours-ish later, Donald Trump, full bold posts And then somebody commented, they're like, oh, well, it's not in the timeline. And I'm like, yeah, it is. Literally, as you scroll through the timeline, you get the full bold Donald Trump. It's like as soon as Donald Trump comes back to X, Elon Musk all of a sudden hates bold. Oops. As soon as Trump comes to X, oh yeah, we're going to get rid of the bold feature. Next thing that's going to happen is Elon Musk is going to get rid of the all caps feature, the caps lock. Caps lock will now be disabled. Thoughts on wolf speed? Dude, I don't even know what wolf speed is. What is that? Should I know what that is? I just don't. Wolf speed. Who dat? American developer and manufacturer of wide bandgap semiconductors focused on silicon carbide and gallium nitride materials and devices for power and radio frequency applications such as transportation, power supplies, power inverters, and wireless systems. Oh, Tesla's down 4.4%. The Qs are down. Okay, yeah, I literally have no freaking idea what wolf speed is. But if you want my thoughts on it, usually we do this kind of stuff in the course member live stream. But you know what? Let's go look at it right now. Oh, by the way, yesterday at 4 o'clock, first time started looking at some of our first financial advisory clients and their situations. Boy, every person's situation I look at so far with the team, I'm like, okay, we've got some work to do here. And it's really going to be interesting because I think that's probably true for the vast majority of people. Like, there are so many things that an outsider looking in can go, okay, let's start here and let's start working together on fixing some stuff. It's really incredible, whether it's from businesses or family trust issues, like the entity, or real estate issues, real estate acquisitions, dispositions, code enforcement issues, whatever. It's really interesting. And so we're happy to provide that value. But anyway, let's look at wolf speed. So here's wolf speed. Raquel wants you to know, here comes the stupid sales pitch. Yep, you're right. So go to stockhack.com to learn more, or if you have questions, email us at staff@stockhack.com. Did I mention there's an expiring coupon code at meetkevin.com? Make sure to get in before 11:59 p.m. California time on Friday because the prices are going to go up. Guaranteed to get the lowest price now. You pay once, you get lifetime access. And the sooner you're in, the sooner you get the alerts. And the sooner you get my insights on fundamental analysis. Thanks for teeing that one up, Raquel. Appreciate that. Thank you very much. So women stop shopping Nike. I said this 6 months ago. We'll continue to bleed. I talked to Lauren about this, and she was funny. She's like, I'm like, hey, what's up with Nike? And she's like, trash. I go, why? I go, she goes, on is better. And then I'm like, why? She's like, better styles, fit better, everything's better. Nobody's buying Nike anymore. The fads are over. And she's like, this was very interesting. This is Lauren. So she doesn't sit here and look at the sticks all day long. She's got 7 kids, man. She's like, the thing about Nike is it's a fad-based company. Yeah, sure, they might come out with a new hit product or whatever, and then you're going to see revenues spike for a period of time, but it's just not going to last. It's going to fade. And it's like a meme, she said. And I'm like, who did I marry? Very interesting. Kevin, please go into the Talk to a podcast. Bro, there's nothing that I want less than to go on the Talk to a podcast. Like, no. I do not want to go on a podcast with some young 20-something. What are we going to talk about? We're not going to talk stocks. We're not going to talk real estate. We're not going to talk investing. We're not going to talk kids. We're not going to talk family. All those things that I care about, I cannot have a conversation with this person about. So, no thank you. So let's see here. I actually think Disney is a better bet than Nike. All right, so let's look at this, Wolf Speed thing. So what do we have here? We have a company that has a net loss of almost $1 billion. Wow. Their net loss is almost tripled. Wow. They did have discontinued operations. I'd like to see what that is. Did they suck basically at doing something? So I'm just gonna put here what failed. Right? I don't know. But something failed here. Okay. Then you have negative cash flow, substantial negative cash flow. Negative $3 billion in cash flow in 1 year. Yeah, that's terrible. Okay. Current assets of 2. Oh, jeez. Okay, here we go. Current liabilities. Okay, well, they got enough to pay their current liabilities. That's fine. Long-term debt and convertibles. Good amount of long-term debt. And what's our income statement? Income statement. Are you kidding me? A 1% margin? Down from 29%. Well, part of that could be because of the discontinued operations. But their revenue's flat. Well, that's... The discontinued operations, it depends when it was. Because the discontinued were already written off in the cash flow statement for the year. Did we take the disc op loss this quarter? That could help explain that. But otherwise, even last year at this time we were losing money. This is some trash. So I don't know anything really about this company, but whatever it is, they suck. Let's see, any notes on this discontinued? Nope. No notes here on the discontinued. We have 2 priorities. How about make money? Fabs. Proactive. Steps to slow down CapEx. Oh, okay. Yeah, we're going to be proactive in how much money we're spending on this money-losing business. Significant factory startup costs. So what's the discontinued operation, though? Because you can depreciate this stuff. Let's see what their depreciation is. 3 minutes to the opening bell. Dude, only $44 million of depreciation in the quarter. Which your capital expenditures you would depreciate. And the cash flow is still substantially negative, and y'all lost $145 million in a quarter. This is terrible. This is some trash. Somebody here says, discontinued ops are just a common name most companies use for old business units or ventures. You won't find any filings or news reports on it. That's not true. It has to be disclosed. And it's going to be in the SEC filing. I will go find it. A. B, it's important because if it's another fab that failed, I want to know about it. Why did you all suck, basically, right? So these things are actually very, very important, and they are disclosed, especially since they just posted an annual report in August. So I don't know if I'll be able to find it before the bell, but I'm going to look. Look at that. Look how fast that was, dude. My very first Command F under the overview of business activities for the company. It's not to make anyone feel bad. Everybody should be able to learn from this stuff. As a result, we have classified, here it is. The RF business divestiture represented a strategic shift that had a major effect on our operations. The RF product line is now discontinued, basically. So their radio frequency line basically failed, right? So why? I don't know if they have any more comments on this. They do. They have a whole note on it. So you'd really have to understand this. But, you know, whatever happened here, it just makes you wonder, like, okay, well, if your RF business failed, is anything else going to fail? Note 3. Note. Where's note 3? That's note 1. Note 3. Okay, here it is. 1 minute to the bell. The company completed the sale of its RF product line. And they don't explain exactly why, but you have all the details here as to what happened. Company will forfeit 1/4 of its shares, blah, blah, blah. So somebody basically picked up a wedge deal here. So I'd want to know, like, how much of this business relies on that. You know, you'd have to kind of break down segments next. Segment revenue and kind of see, like, hey, you know, jeez, Lord. Stupid Adobe. Anyway. All right. Let's go to the bell.
94% 4 stars and above. That's 70% of 118 billion in revenue.
Yeah.
They get a 5% bonus when you're 4 stars or more. Then you get nothing at 3.5 stars. So it falls off a cliff. That's what we're talking about here, and that is why the revenue reduction as a result of this is so significant, Carl.
Let's get
these plans, Carl, it's a nightmare. So you really just rely on this. That's all we have.
Let's get the opening bell here in the CNBC Real-Time Exchange. And the big board, it's Standard Aero, an aircraft maintenance services provider, celebrating an IPO today. We'll talk to the CEO and money movers in a couple of hours. At the NASDAQ, Baird Medical, a Chinese medical device developer, celebrating a listing via SPAC. Speaking of China, Shanghai up 8, Hong Kong up some 30% over the last dozen trading days, Jim?
No, I referred to it in I listed my top 10. I'm seeing money that looks to be flowing out of NVIDIA, Apple, Amazon into things like JD.com, PDD Holdings, into Alibaba. It's almost as if that's where the hot money's going. I come back once again to Dave Tepper when he goes, anything China.
Although your preference appears to be for Baba specifically.
Well, because Baba's really cheap. I mean, even here, Baba's incredibly cheap. A lot of cash, very good company, really American financials. Anybody who really wants to look at a Chinese company that looks like an American company, it's Baba. And David, you know management there. Management is terrific at Baba.
Yeah, and I mean, listen, Joe Tsai's been back in there, obviously very much involved in sort of helping to run the company again. I mean, take a look at just the 1 week, basically, on Baba, because it's extraordinary what it's done. That 1 year, that's all a week.
Baba has absolutely killed it just in the last bit here. Absolutely killed it. Okay, let's keep listening.
These various forms of stimulus the Chinese seem to be adding to the economy. But right now, the market seems to be just getting way ahead of it.
Right, and you're going to begin to get this problem if you're a fund that tracks worldwide, flows. You have to come in. You have to come in right now just because the momentum's so great. So it feeds on itself. Carl, look, no one's even thinking about whether the companies are doing well.
Because we believe the stimulus, they mean it this time.
Yes, they mean it.
Or as Semblus said, acting out of desperation.
Right, and Semblus, look, there's been a couple times where it's worked, and Michael Semblus at JP Morgan, who has not been a believer until now, and I think that he's convinced a lot of us, well, wait a second, I've liked Baba the whole way, but when I was in Italy, I did get a very curious TikTok from David Tepper. It was a little commercial. It was just a little thing singing Baba, Black Sheep. And my wife says, what are you watching? I said, I think I'm watching billions of dollars being made.
You were. That said, the big four that I think of in China, Nike, Apple, Starbucks, and Tesla, are they going to be beneficiaries as well of the stimulus in China?
You doubted me on Starbucks. I said that when you have a little more money in your pocket, you go get pumpkin spice. Now, I don't know if that's
I don't know if I did doubt you on that, did I? I mean, I doubt you on so many.
People think I was chided
on
by
so
you.
many things, but I'm not sure it was
no,
that.
I was chided.
Yeah.
Not upbraided, chided.
I love the arguing over China. Yeah, it'll take a long time to figure out if that Chinese stimulus is actually going to work. My guess is it'll probably take a year or so. And what you could see is a bleed down in China over the long term. In a potential scenario where you actually end up losing, substantial earnings over time as companies just hoard stimulus or utilize it to pay down debt or whatever. We'll see. Anyway, all right, let's take a peek at some of the goodies that are going on here. And how the market is moving at the open. So yields up. Tesla is recovering. Watching Tesla here. Under this 240 line, or a 250 line rather, I feel like that makes sense that you'd get a recovery here. I actually don't think the deliveries were that bad. I mean, they did technically miss, but that's only because they revised deliveries up. And I don't think they're that bad. So we'll see if people buy the dip on it. NVIDIA's popping up a little bit here. Nike's still down about 7.8%. You've got Apple that's down, 65 bips right here. Yeah, Apple falling pretty decently. Tesla's really got to break this 250 number right here. Once you break this 250 number, I wouldn't be surprised to at least get to some of these moving averages, 255 or so. Again, really surprised that the Qs are basically at exactly the same spot as they were when the ADP report came out. It did spike yields substantially higher, which again is bad because you're adding more restrictiveness to the economy. Again, bad. So not the biggest fan of that. Then I do think you're in a situation where let's see here. You've got, yields are up at 3.811%. That's pretty rough. This is some pretty fat, yields right there. And again, I think they hurt. So we'll see. Okay, a little bit of an additional move down here on the Qs. Weird. Still getting a drop on the Qs. That's crazy. I really don't know why you'd be getting a drop on the Qs. Look at Enphase. Holy crap. Down 3%. Oh, that might be going to 100 today. Holy smokes. That's pretty remarkable. Okay. Let's see here. Yeah, they're talking about yields moving higher here. Yeah, this is a crazy move higher in yields.
Carl, if you saw this first review I saw in the Times about Apple Intelligence, I would not say it was a ringing endorsement at all in terms of the reviewer and what their thoughts were about what it really can be used for effectively.
Isn't now the concern about the high end because users feel whatever we're going to get is still on the come regarding Apple Intelligence?
Exactly. Maybe you want to wait. Costco's got a great deal right now. That's where I was going to go. And now I feel like, let me see what it really looks like so I don't jump the gun. I have to be, like a lot of people, it's just I'm in that period where it's time for refresh. And I want to kind of see what it's like. And I trust it, but I want to see what it's like. I think I represent kind of the majority of people. But why people don't understand is that just means, well, then the next quarter is going to be better. That's what I want. I don't think it's a reason not to own Apple. I think it's going to be an extended 16. Why not?
We did get this awkward downgrade of Timo out of Ray J, where they go
You're right on my 479.62 line on the Qs. So this is kind of a make or break point here for the Qs.
They went from buy to strong buy. We had everyone. I had Ben Stoto, who is our chief scientist and research director. What is this? This thing doesn't read badly at all. Remember, Mike Sievert was saying the phone's selling well, but these analysts, they know more than Mike Sievert. Right? There's a guy. I mean, they must know much more than Sievert, right? He just wears funny clothes.
I mean, they do have to occasionally question management and the rosy outlook. You never know.
Yeah.
You made the point yesterday. It's well taken. Nobody has done a better job over a period of time than Timo, whether it was John Ledger prior to Mr. Sievert or the seamless transition to Sievert and how well they've done there. Any period of time you want to look, they've crushed the competition.
Absolutely.
Period. Past performance not necessarily indicative
but that was
of
good. That was a good
performance,
statement that you used.
Thank you. I appreciate your reviews.
It's kind of like, people give Lilly props for having thematic discipline over 30 years.
Yes.
Whereas Timo's rivals got into the entertainment business and did all kinds of things that might have been arguably distracting.
Right, John Ledger was people thought he was like a pop-off. He was one of the most disciplined people ever. And Sievert is equally as disciplined. When I saw him,
there are some questions, though, about what they're doing in fiber. They've got those two acquisitions. They're not particularly large.
They made the $12 million for the
we
one
talked
that we thought
about
they'd never go
Sievert when he was
past
here most recently, sitting there, but it's still, I think, somewhat unclear in terms of what exactly is the plan.
Fixed wireless. He says, listen, Jim, there's no limit here.
This is boring. All right, let's pop on over here. Let's go to see what they got on the Doomer channel.
For the mortgage space, but it's been interesting when you think about Home Depot as well as Lowe's because they are a little bit of a different story. Usually Lowe's is more of kind of a DIY type of kind of project type thing. We saw a lot of that during the depths of the pandemic. But when it comes to Home Depot, and especially with those types of stocks, a lot of that also has been just because those two companies are in the discretionary space. And those two, like discretionary as well as tech, were hit the hardest yesterday because they're more of the growth kind of corners of the market. So I think that's more of kind of it's being kind of holding back those gains, even though it had more of an optimistic rating here.
Yeah, it's a great point. Of course, Home Depot up mightily year to date, but a lot of question marks that are forming over the discretionary space. Jess Menton, it's always great to see you. That is Bloomberg's Jess Menton. Meanwhile, let's take a look at these broader markets right now. Still under pressure, actually deepening losses right now. If you take a look at the S&P 500, at the NASDAQ 100, both down about 0.4%. Not really many bright spots to find in this market, especially if you take a look at the Russell 2000. That was your biggest loser on the day, but still off about 0.3%. Mild outperformance if you want to be optimistic, Shonali.
We were talking about most sectors in the red, but I also want to talk about some individual stocks, particularly Humana. The drop is the most since you've seen since February of 2009 at more than 22% lower at the open. There are worries building about Medicare revenue on top of previous worries about costs and tighter reimbursements. We'll keep an eye on that as the day goes. This is Bloomberg.
Okay. Let's go here. Okay.
It takes Medicare. Medicare was like, boom, now I don't have a plan. Boom, no plan.
And we've been talking about Medicare in two different ways. Then we also have been talking the last couple of days about CVS, their Aetna unit, mispricing Medicare Advantage. In part because you pointed out pickleball, but also you had this post-COVID period where elderly people didn't go to the doctor, and then they did, and unfortunately, things were more advanced that are not good, such as cancers and all sorts of things, which then become more expensive to treat. Hence, you mispriced your Medicare Advantage policies. That stock up a bit after a decline yesterday. A lot of people saying this potential split of the company doesn't make sense.
Well, it's just hard to balance sheet. I told you that I think
Q's now falling more. I'm watching. One of the things that I'm finding right now is honestly, this Bitcoin move is pissing me off. So, like the momentum at the start of the day, we should have had enough momentum at the start of the day to break 250. But the problem is you have good news is bad news, momentum dragging the Qs down, and Bitcoin losing 60,700. The next stop for Bitcoin is way down here at 57,580. So you don't really want to close below this line. This is a bearish omen, in my opinion. First of all, the reaction to ADP is bearish. BTC dropping here is bearish. And we did not get enough momentum on Tesla to break through 250. So, yeah. This is interesting. Yeah, if you haven't seen some of the alerts I send over in the courses, check them out on some of the trends that I'm seeing or you know, bets I'm making. Obviously, no guarantees we can make money. The goal is just to observe trends and make moves. But okay, so what else here? I did just take some profit though on a Tesla call, but I was hoping for a lot more momentum. I was also tempted, honestly, I'll say, I was tempted to buy a put on Enphase at like 103, but the liquidity is horrible. Like I went through multiple different dates here when it was negative 3%, somewhere around here, and the option chain liquidity is terrible. But it's probably going to go back to 100 here if this trend continues. So that was one of the ones I was looking at. I went for a put on something else that I sent to everybody in the Stocks and Psych group. That put right now, oh, it's pretty good. That's up, what is that, like 15% or something like that? Hell yeah. So, and that was only in the last 6 minutes here. So I think, unfortunately, though, that might continue. We'll see. All right. Geez. Okay, so BTC's trying to pull a little bit of a rebound here. But look at NVIDIA. What's going on? I really think it's these higher yields that are sort of reinforced by the Federal Reserve Chairperson Jerome Powell saying everything is fine. I think markets are kind of like, bro, everything is not fine. You're taking every excuse to say everything is fine. And now, you know, yields are up on that, on you saying everything is fine, and you're actually tightening more. That's bad. That's the only guess I can really take here. We'll see. See how that trend moves. All right. Everything's fine, exactly. Anyway, yeah, if you want more of my sort of alerts or thoughts or commentary on individual stock moves I'm seeing, make sure you're part of the Stocks and Psych group. You pay once, you get access to the course member live streams forever. The full archive going back 5 years, hopefully the next 5 years. You know, for as long as I stream live streams on YouTube, you get access to the course lives, and I have no plan of stopping anytime soon. I actually really enjoy it. It helps me wake up in the morning. It gets me ready in the morning. You know, I'm up at 3 a.m. every day just trying to crank research. Crank! It's the crank, bro! Come on. There we go. Okay, this is good. This is finally pushing back over this line. You didn't really want to lose this. It's not ideal. Not ideal. So we'll see how these things continue to evolve. Okay. So come on. You can do it. Stay up. Pull up. Pull up. No, not plane references, Kevin. No. Terrain.
Don't you think? And it made Musk his enemy for life.
Don't get me involved.
I'm not. You're not involved?
Not involved.
That's the first time you've ever, like, I don't want to.
Really? You don't want to be involved? You're afraid.
I'm not afraid of
You're
Musk.
afraid of Musk.
I'm not afraid of Musk.
You are afraid of Musk.
No, I mean, just because you call me a hologram?
I'm not
just because you said that I'm not real?
I tend to enjoy my conversations with him. And
I see you go back and forth with Musk the whole show.
Just checking.
On a much smaller scale, but regarding transportation, Toyota, Jim, investing $500 million into Joby. That's getting
I'm shocked at that because Joby's been one of in the lightning round. Everyone wants me to recommend Joby. I just haven't been able to, but that's a substantial. That's a nice endorsement.
You haven't been able to get there.
Bitcoin's finally popping a little bit. Here we go.
Right, it was a SPAC, yeah.
Yeah. Well, there's a SPAC. There's plenty of Chinese SPAC that I guess, don't you think?
Nvidia's popping a little bit.
He says he's buying everything.
Wow, Joby. those little aerial transport.
You doubted the day it came in public. You said that you doubted that everyone by 2024 would be going
Carl
in.
remembers the Morgan Stanley piece.
Some of these TAM projections were aggressive.
I think they came around the same time as like Weber Grills.
$8 trillion overall. I mean, it was one of the more risible things that I've seen in research.
Oh my God! Upbraid, a chai, risible.
Yeah.
I gotta go get Kaplan right now. Get Kaplan on the phone.
You're the one who does pastiche and fanciful all the time.
Look, it's a mosaic and not a pastiche. How'd you know that?
As we go to break, watch bonds today. Obviously, we've seen yields creep a little bit lower in Europe. In fact, the French yield yesterday, biggest drop in a couple of years. We will get some Fed speak today, and ADP did come in heavy at 143. Stay with us.
Ooh, some Fed speak. Yeah, talk those freaking yields down already, would you? Jeez.
For the diversification of our furnishers to reduce this discrepancy, and acceleration of level playing field agenda and pause in terms of regulation. It's critical. And if we don't have the level playing field agenda, we will be killed in this market. And in parallel, for clean energy and artificial intelligence, we have to invest much more rapidly and protect as well our key players. Otherwise, they will be reallocated in the US.
Lars Henrik, I mentioned the joint debt question, but actually there's a broader issue here that you listen to President Macron, you read the Draghi report, you read many speeches, frankly, from European leaders, but not from the German Chancellor, not from German leaders, assessing the threat to the growth model as fundamentally as this, and the stark language that President Macron has used. If looking on the outside, how does Europe move forward, rush forward on this agenda if there isn't that understanding, that same analysis at the top in Germany?
I'm not sure that you don't share the analysis with the Chancellor Scholz. Obviously, he's a different person. But I think the analysis that we need simplification, what you're also saying, we need more investment.
Very boring. So I want to go look to see what we got in the way of some Suitsvilles. Let's go find out. And okay. So let's see what people were saying. October is already living up to its reputation for volatility. Tuesday's sell-off underscores October's reputation as the most volatile month in U.S. stocks. Ooh, volatility. S&P coming off its worst day since September 6th. That was yesterday. Okay, big deal. And let's see here. Then we've got... Okay. Oh, well, BTC. Look at that recovery. That's pretty nice. Pretty nice recovery right here on the Bitcoin. Tesla now under 5%. 5.3 now. Holy smokes. It's getting smoked. The Tesla move ain't no joke, as they like to say. Okay. And we've got, what else is going on here? Nvidia's trying to recover. Nike's still sitting at 7.7 now. Ouch. Apple had a little bit of a run, but now ticking down. And, Nvidia now falling. The Q's picked up a little bit from some of where they were. Looks like you've got a little bit of a recovery coming in here. Yeah. It's right there at the line. Right at the line. That's interesting. That's very interesting. What's it with this, with these lines? Kevin and the lines. That's always what it is. The line, you know what? They're going to start calling me the line man, like at the airport. Okay, so let's see where it goes. Oh, wow. Tesla's almost at -6 now. Very, very interesting. Okay. Okay. What is my line on the Qs? I see someone asking. The line on the Qs that I have is 479.62. Okay. BTC's happy. Apple's not. Nvidia's trying to be happy. And yeah, Tesla's just, where's it going? 230 is my next stop on Tesla. I remember when we broke 230 earlier. Baba, somebody's asking about. Yeah, the Chinese stocks have absolutely been crushing it. Up another 2% right now. My resistance line here is 118, by the way. Okay. So, still seeing pretty solid move here on Bitcoin. And that's potentially as Nvidia's moving up. Now let's look at some other ones here. So Enphase, oh, it finally started bouncing after hitting 104.72. I was thinking it was going to go to 103. I don't actually have a line at 103, but I've seen it bob around 103 for a while, just sort of mental memory. Carnival's back under 1784, also a line. Intel's at 22. Google 166. Where's Google been sitting on the day chart? Down from 194. Almost a bounce there at 152, but it actually ended up bouncing at 149. Okay. Palantir's positive again. Not bad. FedEx, Ethereum, Apple. Take a look at yields now too, and then I want to see what some of the suits are saying. Q's really just hanging out right here. Also having trouble getting across this line. Something that had trouble getting across the line was Tesla this morning. When Tesla got rejected here at 250, it really became more straight down. So I don't know if you'll see that same pattern repeat over here on the Q's, but it's possible. Bonds bear steepening as jobs whisperer numbers inch higher. Yup. Definitely seeing a steepening here. I mean, 6.5 points on the 10-year. That's a crazy move up. All the indices are negative now. And gold is negative 54 bips with oil 3% on Brent. Wow. Q's going back to test the line. Let's see what Jimbo's got. And keep looking for some suit reactions here. Oh, Nvidia keeps rising.
In snacks, and it's not reflected because they did have this Hebrew National factory problem. Then at Levi's, let's see if they can pull up. This is one of the things. This is one of the great denim markets, and Levi has not been able to capitalize from that. And then Matthew Prince has got some amazing stuff that I think can really help. When you're using AI, there's a lot of mistakes that are made. Well, he's going to be able to show you a product that kind of eliminates a lot of mistakes. And he's also going to talk about, well, let's just say, I hope to get him on the election. He is someone who can really stop the Russians, the Chinese from hacking us. Because the Russians, they have a candidate that they want. They don't like the other guy. And it's pretty important. I didn't want to get in politics, so I didn't say her in the name.
No, our intelligence services have made no secret about that as well.
Who do the Russians want you then?
I think we all know who they want.
All right, well, yeah. How many electoral votes?
How many electoral votes do the Russians get?
Yeah. Pennsylvania doesn't know. I mean, I'm from Pennsylvania, but Russia.
Interesting. All right. They don't really have anything on the other channel other than Macron. Bitcoin's trying to top out right now. Oil and gas companies are moving nicely today. Exxon, Shell, those are some of your BP. Those are some of your big movers today by market cap.
Our advice is personalized.
Oh, that's another ad. Okay. No, a little bit more of a pop there on BTC. Look at that. It's a good thing. You know, like, it shouldn't be collapsing under this line. And really, you don't want the economy to go into a recession. It's a bad thing. So the jobs data was great this morning. And so finally getting a bit of a recovery here. Still holding on, though, to about negative 30 bips here on the Qs. You're consolidating at this point. I want to watch that pretty closely for a breakout. Looks like 480. There you go. 480 is probably breakout level that I'm watching. And then you've got Tesla here at about negative 6. Apple, what's Apple doing? How's Apple down another? I mean, this is all just delivery drama, it seems. Lots and lots and lots of delivery drama for Apple. Yeah, really holding on to that line. Another little pop on Bitcoin, though. Is it NVIDIA that's pushing? I think so. I think it's moving with NVIDIA. That's an interesting trading pair if you're watching it. NVIDIA and Bitcoin today. And then Tesla, like, I know a lot of people are waiting to buy the dip here, but you're not getting any indications of a reversal. At least not right now. RSI is 24. Wow, that's low. You'd think you'd get a pop here. Oh, well. Okay. What else, me friend? What else? Nope. Nothing else. Well, fine then. That's all I got. Thank you so much for being here, folks. Wish you the best out there. Hope you can go make lots of money. Check out stockhack.com, mekevin.com. We'll see you in the next one.
Even though I'm a licensed financial advisor, real estate broker, and becoming a stockbroker, this video is neither personalized financial advice nor real estate advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show should not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purpose of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services which we may benefit from. I personally operate and actively manage ETF and hold long positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuers other than HouseHack, nor am I presently acting as a market maker.
There you have it. Thanks so much. We'll see y'all on the next